17 years ago, I was a student, and a geography student in Utrecht, and I decided to stay to live with my parents because for me it was not affordable to live on my own. Gladly, I'm living on my own at the moment, and I'm working as a senior research manager for Bouwfonds Investment Management for the business unit residential. So I'm responsible for the European residential research and also the research for the student housing projects in Europe. Bouwfonds Investment Management is the real asset investor of the Rabobank, and we have currently around 6 billion assets under management spread over 5 business units. It's farmland, communication infrastructure funds, and also parking, commercial real estate and residential. The residential business units manage around 1.5 billion assets at the moment in Europe. And of those assets, we acquired around 500 million student housing and micro-living. Because it's not mentioned really, but we are not only looking into student housing, but also micro-living for young professionals. We are now working on a new fund for European residential, but also on a new fund for European student housing. But we are really targeting micro-living for both students and young professionals. And we are really looking into the middle market segment, because we really think affordability is a major issue nowadays. So we are looking into properties in France, Germany and the Netherlands, but we are also watching Spain and Italy as well. So hopefully this is a good introduction of myself.
Great, thank you.
Good morning, my name is Philipp. I work with the VP of CORESTATE Capital. We've been developing student accommodation, micro-living apartments since 2009. We currently have around 3,500 units under operation in Germany and Austria, and we have around 1,000 units under development in Germany as well as Spain.
Good morning, my name is Ronnie. I'm with MPC Capital, in Hamburg-based asset management boutique. I'm in this sector now for approximately 7 years. At MPC Capital, we started 3 years ago a development and operations platform for primarily Germany. We have now, under the brand Stay 2, some 1,100 beds in operation and in various stages of construction. And we are currently in a process of expanding our geographical range and exporting the product into other European countries.
My name is Gorzawski. I'm the MD for Europe for Harrison Street. Harrison Street is an investment manager that is focused on the education, healthcare and storage sectors with currently 12 billion assets under management. We came to Europe with a dedicated European or pan-European student accommodation fund at the end of 2015 and have since entered 3 markets here in Europe with investments in Dublin, in France and in the UK.
We had a session actually last week on logistics, which interestingly was kind of counterintuitive in a way that the political instability, the low economic growth didn't seem to be impacting. The same seems to be true from what you can see of this world as well. Roelfke, what's leading to that, and what are the driving forces do you see, and why are you interested in investing specifically in the student housing and micro-living sector?
Well, I think the main drivers are already said in the presentation of Samuel, as well as the other presentation. The main thing why we think it's interesting to invest in student housing is that the number of students will increase in the years to come, and especially the number of international students, which is our main target group. Besides that, student housing still gives, it's becoming smaller, but a risk premium against normal residential. It's also economic resilience, so if you are looking for the GDP growth, the economic growth, and the number of students, what you really saw during the crisis is the GDP is going down, but the number of students is increasing. So that's also a very interesting topic, why it's interested to invest in student housing, and of course the shortage of student accommodations in Europe. And we are especially looking into continental Europe because we really think that it's becoming more and more attractive. So we start to look into the market, I think, around 8-9 years ago, and we really see what's happening in the UK, 10 years ago, it becoming a mature market. It's happening now on continental Europe. So that are the main drivers why we are really keen to invest in student housing as well as micro apartments, because the number of young people living on their own is increasing as well, the number of single person households. So that's also a very interested target group, and they are really more and more willing to rent instead of buying a home, because they really need and want the flexibility. Because also, for example, the labor market is becoming more flexible than a few years ago, so they really need the flexibility. And renting is a good product to give flexibility.
And just to clarify, are you seeing, because you're launching funds at the moment, are you, in those funds, are you having a micro living fund and a student housing fund, or is it all part of the same asset class for you?
It's part of the residential asset class, but we have a Bouwfonds European Residential Fund, which is targeting normal residential and also a small part student housing. Besides that, we have the European Student Housing Fund, which is more targeting on student housing and micro apartments. If I'm looking at the products we already bought in the years ahead, then the student accommodations looks a little bit like micro living. We have in Rotterdam and Amsterdam apartments of around 24 square meters. And the young professional ones, of course, more square meters, but it looks a little bit the same. The mutation rate is also high with young professionals. It's the same with the student accommodations. The only main difference is maybe during summer, and they are younger, of course, most of the students. And what we see is that young professionals don't want to live with students, so they would like to have their own entrance, etc. So we have some buildings with young professionals and students as well, but then with separate entrances.
Okay, good. And Daniel, we saw obviously from Samuel some of the sort of key indicators. How much are you looking at the demographics? How much of a play is that for you? And what areas do you specifically look at when you're thinking of investing?
I think demographics are at the core of our investment thesis. So tying back what you just said is basically it's really all our investment strategies are built around demographic developments, whether it's in education, in healthcare, or in the storage sector. In the education sector, we saw all the main, I think, KPIs that also Patricio pointed out. You're talking about total population, you're talking about the age bracket for that kind of like qualifies for higher education. You're talking about international students, and you're talking about mobility within the country and internationally. And there you see clear patterns. Certain cities that attract more international students, certain cities that attract more domestic students, and we can see the trends across Europe combined with urbanization and the Generation Y, the millennials, the Generation Rent. So those are big drivers, and all of them combined with the increased mobilization after the Bologna process that kind of harmonized the different study systems across Europe is driving huge demand, and I couldn't agree more. Flexibility is very top on the agenda. Affordability is top on the agenda for students, and students have become much more sophisticated when it comes to demand of the product. So the product used to be very simple student halls, and now they want the whole kit. They want to have Wi-Fi, broadband services, amenities, study lounges, gyms. So the product is moving further up the curve. And in terms of developments, what we've seen in the US, we've seen that 10 years ago, you come to the UK, that's 10 years behind. You move further to the continent, you see another gap of 5 years probably.
Okay, so really what we're seeing at the moment in the UK is going to be coming into continental Europe over the next kind of 5 or 10 years, basically.
I think to a large degree, yes. You'll have country by country differences, cultural differences and preferences, whether it's Spain, where you're looking at more fully catered model, or in the UK versus Germany, you have a difference between cluster rooms and studios. But I think the general trend of how the urbanization, the mobilization and sophistication of the product is developing, you'll see that across Europe, yeah.
Okay, good. And Rainer, where are we at the moment, do you think, in Germany? You're obviously looking specifically at the German market. Where are we in terms of the requirements of students? And how do you see that? Do you also buy into the same idea as Roelfke here in terms of the simple process of a move from student living into micro living? Is that the focus for you?
It definitely is, Richard, and I think there are a lot of relevant arguments. From the student perspective, one is that we've seen tremendous growth of international students in the last years in Germany, and as the figures show, there are visions of Germany overtaking the UK in the next 3-4 years as number one international student destination in Germany. That's one element. Second is the university system in Germany has evolved more into that direction to embrace internationals, meaning full courses in French, full courses in English. So the language barrier is ceasing to exist. From the resi side, we have trends like Daniel just indicated, reurbanization moves. We see a strong focus on metropolitan cities. If you take, for example, Frankfurt is growing by 10 to 15,000 inhabitants a year. The production there is around 3,000 units, which also include owner-occupied units. The city currently states a gap of 40,000 missing units. They expect it to be 90,000 in the next 6 years. And whether a Brexit wave will spill 1,000 or 10,000 people into Frankfurt in addition, it doesn't make a difference. And you have 50% single households in Frankfurt, and you have 80% of the households without kids. And these are typically not the people looking for 5-bedroom accommodation, they're looking for smaller units. And here is a fierce challenge between students on one hand, young professionals and commuters on the other side. And this is, let's say, the fundamental for the student accommodation micro-living product growing more or less together. And in addition, you have a situation that from a building perspective, it's a resi product. We don't know the purpose-built setup that you have here in the UK. In Germany, it's resi full stop to a certain extent, so it does not make a difference whether you have students or young professionals on the scheme, besides the fact that you need to manage the scheme in an appropriate way and separate the groups and so on. Yeah? But from an energy efficiency standard point of view, from a construction cost point of view, it doesn't make a difference. And that's in principle the fundamental which provides strong growth potential in most of the German cities, which is the economic-driven list of cities. But in addition, you also have a list of 20-25 top university cities who all show the same characteristics like the cities like Hamburg or Frankfurt or Munich or Stuttgart.
Okay, good. And Philip, you're obviously looking specifically at the investment side. Let's run through a couple of those cities. In the regions that you're active in, why are you specifically active in those regions? What was the attraction of it? Was it down to cities specifically, or more of a country-led approach?
Yeah, I mean, at the end of the day, if you look at some of the statistics we've seen today, we talk about country-level statistics, and then obviously I remember your chart with Austria being a light blue, but then you see Vienna right at the top. So I think the way the market works today is we're not so much focused on the country-level strategy, we're very focused on the city-level strategy, because at the end of the day, you can have champion cities in countries which might not be so attractive because of some of the demographics. Might it be population side, might it be the size of secondary cities within the country, because obviously some of the European countries have very dominating cities such as Austria and Vienna. From our investment strategy for the past year and for this year, we've identified that we want to be very strongly present in the top 7 cities, because the market right now, as we all know, is not cheap. And we believe that if we want to have long-term growth, I think these are the cities which will attract more investment in the future. I think these are the cities which will attract more population growth in the future, because as Daniel said, we see urbanization being one of the driving factors right now, and people are moving away from non-urban areas into urban areas. And I've seen some statistics that by 2030 in Germany, 60% of the population will be living within an urbanized environment. So we believe that these demand factors is something which has to be factored into the equation.
That being said, I mean, we'd love to do more in secondary cities, but given the market dynamics right now in Germany on the development cost side, it's very difficult to justify investments in secondary cities, simply because the rental levels and the investment grade rental yields you see in these markets simply don't make the numbers work. So it's a little bit of catch-22 right now.
Okay, good. And Samuel, I just wanted to pick up with you the point you made about the UK. How much of that do you think comes down to just the market dynamics of the fact that the UK is sort of 5 years ahead in that sense and is a mature, a more mature market? How much of it is that tailing off? And how much of it do you put down to, I mean, do you think there's a Brexit angle to this or not, or do you just think this is part of the general market dynamics? Where are you on that side?
Thank you. Well, in general, when we come to basics, the whole asset class is driven by to meet the need of moving. The whole planet is moving more than previously, and specifically international students move for education and jobs. And the more the destinations make some obstacles to move in, then the less likely it is they have a sort of a sustainable growth. And this is basically what is going on temporarily. This has happened to other destinations, so we can see some, and we already see some slowdown in the growth, actually decrease of number of international students to the UK, 0.6 in 2016, whereas we see huge growth in the continental Europe. This may change soon. It is really hard to predict what Brexit will do long term, but now more students are, as a primary option, looking elsewhere than UK. UK has been with the US the primary destination. If I cannot get there, I go elsewhere. But now, with other destinations who, as mentioned, have more English taught programs, have active destination marketing, and are sort of easing the regulations. So, sending welcoming messages, it is more likely that that the other destinations will be more accommodative to the UK. But it might be easily temporary phenomenon, because as we saw at other destinations, the traffic, the mobility pattern can change easily within a few years once the conditions change.
Okay, good. And Rocco, I know you're active in other areas of Europe, but given that you're from the Netherlands, can you give us a quick overview of that, the activities that there are there? In some of Samuel's diagrams, you've got that although Amsterdam very attractive, it was sort of well supplied. What's the positions in Amsterdam? What about Rotterdam? Some of those other cities?
Yeah, we are not only looking into Amsterdam. In Amsterdam, it's very tough to find good investment opportunities. I don't really agree that the market, that there is an oversupply, because
that's what we like, Rocco. A bit of disagreement.
Yeah,
we like
no,
that. That's good.
especially because I think there are also rooms included in the public built student accommodations, and there is a huge quantitative shortage in Amsterdam. So students want more, and the quality currently for all the rooms for the students, it's not what they want. So they want more quality, their own kitchen, their own bathroom, not all students, but a lot of them. So I don't really agree so with the oversupply of Amsterdam. But besides Amsterdam, we see a lot of other opportunities, and it's true, we are also not looking on a country level, but on a city level, because every student city within a country is different. So we have Amsterdam, which is the capital city of the Netherlands, which will attract a lot of international students. But Maastricht, it's also a very interesting student city. And there are, I think, between 40 or 50% of the students are coming from a country outside the Netherlands. So it's from an international student's perspective a very interesting city. Also Groningen, it's a completely different city. It's in the northern part of the Netherlands. It's on a very decentral location for Dutch people. So it attracts a lot of domestic students which are living on their own, because you are not able to study in Groningen if you are living with your parents, because from the middle of the Netherlands it will take you 2 hours by public transport to drive to Groningen. And that's for Dutch people quite a lot. So a lot of the students are moving to Groningen to live on their own. So we also see a lot of opportunities in Groningen, Maastricht, also Rotterdam. It's also a very attractive city. Actually, to be honest, but I'm a Dutch, all cities in the Netherlands are quite attractive. Because all universities in the Netherlands are ranked pretty high on the Times Higher Education. We attract a lot of international students and there is really a shortage of student accommodations. But it's hard to find good accommodation in Amsterdam. Rotterdam, it's becoming more difficult. Utrecht, it's very hard to find accommodation, but it's the second biggest student city in the Netherlands, which attracts a lot of domestics. And to add one thing regarding regulations, what's going on in the Netherlands, what we see, there is an introduction of a loan system last year, so students don't get enough incentives anymore from the government, so you have to pay a lot by your own. And what we see is that first year students, more and more first year students stay to live with their parents. And that especially affects cities like Utrecht, which is located on a very central locations in the Netherlands, so it's easy to stay to live with your parents. But also cities like Maastricht and Groningen. So although they are interesting, it's very good to watch what's happening with the regulations as well.
Okay, good. And Philip, in terms of, I mean, we heard from Patrizio about the opportunities in Spain, and saw also from Samuel that some of the demographics are playing into that, some of the supply-demand features are there. Do you see that sort of southern European area as a specific opportunity?
Well, I mean, we currently have around 300 units under development in Madrid, so I have to say yes. We like Spain very much, obviously for the same reasons that you mentioned. We think it's a very dynamic market, we think it's a growing market. We think the student demographics in Spain are very good. Obviously, I'm not going to repeat everything from your presentation, but overall, I think Madrid has seen a tremendous recovery in terms of investment activity, maybe more and faster than some of us had hoped. But overall, I think it's a very strong market. The characteristics are very good. I think the only limitation factor right now is a little bit the debt side in Spain, because financing in Spain is very difficult. Spanish banks are difficult at times, and I think this is something which we believe will further increase transaction volume and liquidity in the Spanish market. So once the debt side comes back, we've seen a similar effect in Germany as well as across continental Europe. You know, once liquidity on the debt side facilitates investment volumes, rental yields should further decrease.
Okay, good. And how have you, I mean, Patrizio mentioned also the fact that because the residential market generally has come back, that you're then having to compete for land. How do you find that? Have you noticed that competition becoming much more aggressive over the past 12 to 18 months?
We have indeed. I mean, in Spain, it depends a little bit on the zoning rights. So the property we acquired was previously zoned as a student accommodation, so we were not competing with the residential side, which is a good thing because we're currently looking at a few plots where we do compete with them. And I mean, in Germany, we're used to high price levels on the plot price from Munich, Hamburg, and Frankfurt. But I can tell you Madrid is not cheap, and you're really competing with the residential guys up there, so it's a very competitive market, and it's difficult sometimes to get the numbers to work, so you have to spend a lot of time on structuring the financing side, and overall I agree. Yeah.
Okay, good. And Rainer, in terms of the are you driven also by the demographics in terms of micro-living as of more mobility within the workplace? And the other thing is, given that that's sort of a similar product to student housing, and you're talking about that also being residential in general, does that mean that that's also fitting a senior housing kind of brief as well?
Well, if you take the overall life cycle of residential products by use, student accommodation, young professionals, commuters, established people, and then best golden and whatever ages, we are pretty much focusing on the first quarter of this cycle. Because
so nothing for me, right?
well, yeah. Well, yes. You're just age-wise in the target group. No, but I think a senior living is a very specific product where you have potentially different micro locations. You have in Germany different building requirements in a way, but this sector is in Germany at these days pretty much driven by medical services instead of, like you witness that in the US or in Mediterranean regions, beautiful spots for older people wanting to enjoy this phase of their life. Yeah. But maybe in a few years that might be an interesting sector also in Germany or more central countries in Europe. As of today, we, as mentioned earlier, we see this strong trends of reurbanization. We also witness that people don't move locations if they move jobs, so family stays where they are, and only the one who is affected by job change is moving, which leads to increasing mobility, and all these trends wrapped up together lead to a very strong demand for smaller, affordable, maybe design-orientated, centrally located units who are fully furnished, where you can, on a very simplistic basis, move in, move out. The lease terms, you need to provide a certain flexibility when you leave the pure student-only segment. And so far, we see that this is a strongly growing niche, and not only in Germany. We also witness that in other European spots we're looking in. And as Philipp said, we see also a strong interest in the Spanish market due to the recovery there, due to the facts that Patrizio listed. We feel that there is a very strong attractiveness in the more Mediterranean region, and compared to Samuel's view, we have a much more positive view on Portugal, especially on Lisbon and Porto, and I think that for us, these are the spots we would be looking into in the next 2 years.
Okay, good. Daniel, I just wanted to come to you in terms of some of the trends that you were saying were in the US, might be coming here to the UK and then on to continental Europe. What are you seeing from the occupier demand? What do people need now in terms of development? What are the things that you're putting in?
Well, first of all, our business model is pretty much, we're looking to joint venture with local operating partners in the specific countries. And I think one of the big lessons that we learned in the US and that we applied in the US and we're trying to apply in Europe is that you don't have one size fits all. You don't have the same preferences, the same nuances across regions or across certain countries. So when we're talking about what are the design features that we put in, we really look to the local markets and what the preferences are in those markets. I mentioned earlier in Spain, for example, the domestic student expects a fully catered model. In Germany, the students want to be as independent as possible. So but they're very cost conscious. So you're trying to scale back services and amenities to a level that makes it affordable to them. So it's very difficult to really say across the board that's what we're putting in. It's really a country by country approach. In some instances, also a city by city approach. So come back to Spain, where you have Barcelona, many more international students, Madrid, many more domestic students. And hence you need to cater the local product to what the major demand is.
And are you having to put in gyms? Are you having to do, are there services like that that are now kind of expected?
Number one remains broadband and Wi-Fi. So that's the main thing that students want to see. Gyms are out there, but probably the second most important point for students are study lounges, because the units are becoming smaller and smaller in order to make the affordability work. And the students that are able to afford these prices for the student accommodation and the international students are pretty focused on getting their studies done. So study lounges are something that is a common trend, going away from like the party rooms at the bars to the study lounges. But the market is developing so fast and it's so dynamic. You see new trends every 2 or 3 years. When you designed the product 2 or 3 years ago, the product is outdated today. One example is TVs. 3 or 4 years ago, everybody wanted to have TVs. Now nobody needs TVs because it's only laptop. and streaming that people are asking for. So you need to be pretty much in tune with the trends and what our local market and also international demand is developing.
Samuel, I just wanted to talk, we haven't really talked much about the risks at the moment. What are the, I mean, you know, it's a very positive scenario. What are the risks? Where's our it could all go horribly wrong scenario?
I would put it in context what Philipp said. I think it really drills down to the city level and looking at the details, devil is in details. And this, for example, like Roelfke, you mentioned Amsterdam, like the number says that it is more supply than Milan or Munich. But when you look at the private segment and the usage of purpose-built student accommodation by international students and plans of the city to increase number of international students, Amsterdam has only 8,000 international students, which is 8% of the overall student cohort, which is twice less than average tier 1 city in Europe, which is 16%. Well, if the city turns on, then it will be the great city. Same for Portugal. As a country, it has limited opportunities because you cannot deploy a huge portfolio over there. But when you drill it down to Porto or Lisbon, we see a lot of demand recently for these two cities. If Science Without Borders Brazilian scholarship program will turn on again, which is 12,000 Brazilians on short-term programs for Portugal, well, it will be fantastic. So the risks are in knowing the details, I think. Once you factor them in, you can really have a control risk. But otherwise, I think the overall metrics, the overall demographics, the overall fundamentals are there very much for the next 5 to 10 years. There is no risk in the overall demand.
Okay, good. And Roelfke, in terms of trying to create a sort of European portfolio, currently the market's quite fragmented. So do you think that's going to change? Is that going to be a practical reality?
I think the European market will stay fragmented. It will not be a pan-European student housing market. I don't think so, because the regulations are also on a national level. So I don't think so, and that's why we're also focusing at the moment only on Germany, France and the Netherlands, because we have there the people on the ground. I think that's very important, to really understand the local market and to know what's going on. And I think it will stay the same. But what I think is that international students are really looking into Europe as a whole. I think that's changing at the moment. They don't look at country specific, but if you are a Chinese student, you think, well, I would like to go to Europe, and you will compare all the cities or countries with each other. And that will happen on a European scale, but I think the investment market will stay on the national level, and it will not be on a European scale.
Okay, good. And Philipp, in terms of, just picking up the point that Roelfke had there about the regulatory side, how much does that impact your investment decisions?
I mean, in Germany it's pretty straightforward because, as Rainer said, it's usually either residential, which means we follow the residential code because student housing within German planning regulations doesn't exist yet. So they're still a little bit behind the curve from the Spanish, for example. Or if you want to create a micro-living product which is more tended towards business users, you usually do applications under a hotel scheme. So it's either pure play residential or it's a hotel scheme.
Okay, good. And Rainer, in terms of are you developing new always, or are you redeveloping? What are the opportunities? Are you having to create new product the whole time, or redevelop existing buildings?
We're quite flexible when it comes to green versus brownfield. In most of the cases, brownfields leads you to micro locations where you can't find greenfields. So in inner city locations, it's easier to get access to outdated office buildings, which can be transformed, but as ever in life, those things tend to be tricky. As regards the quality of the existing buildings, then you need to comply with the current energy efficiency standards. But in essence, I think in more metropolitan areas, it's more brownfields than greenfields, and in more university-focused cities, we have an overweight in greenfields.
Okay, good. And Daniel, just coming from you, that recently active in France, or about to be more active in France, do you buy into the story that Daniel was showing here, that there's potential for the French line to move up in a way, and that it could be reactivated, the French market?
Yeah, we believe so, firmly believe so. And France is host to Europe's second largest student population to begin with. They have also fantastic schools, fantastic business and engineering schools. Those are in high demand from students coming from Asia. And in addition to that, I think our approach to the market was slightly different than just looking at bigger demographic trends. We looked at the product that was available in the market, and we saw an opportunity to deliver something that is different than the existing product, which is basically a very basic studio residential building, just says student housing on it. And what we're trying to do is create a product that is more upscale and more appealing to international students by incorporating amenities, by incorporating services that are either targeted to international students or just offer a different service and price points in something that doesn't really exist in the market.
How do you see the incomes from this industry, from the long term or the whole course stay versus the short stays, or some schemes that are acting more as a hostel more than as a student accommodation scheme? And this is a big issue, and because of that is because of in Spain we are having a lot of problems to get a license to develop these kind of projects. What do you think about this? Is this something that's happening in other countries?
Who wants to pick that up?
I'm happy to pick it up. I mean, I think there is a temptation across the board in many of these modern purpose-built student accommodation properties to use more or to allocate more to short-term lets, or even very short-term lets to kind of like catch this touristic element. The danger is twofold. The first one is just regulatory, and what you've seen in Spain is exactly shutting that down in Barcelona. And the other one is, of course, your product becomes slightly different from an investment standpoint. With students, you have between 40 and 40 week and 12 months leases. If you do short stay, you're becoming more and more in a hotel. So the question is, at what point will an investor also look at it from a valuation standpoint more like a hotel than a residential product?
Really recently, let's say in the last 6 months, what we are receiving requests as an intelligence company is that these basic metrics, as you saw today, are not enough. As Bob said, you need to go down to details, you need to scope. For example, now we're interviewing as an independent company, urban planner, for benefit of our client, to know what are the plans, because they would be never shared with the for-profit company, but it's shared with us, so we use the benefit of the independent, and we know what's there in terms of regulations. We interview citizens. So when somebody is about to buy something, we interview the field citizens, how would they perceive if there is a student accommodation? Would there be a resistance, public resistance or not? And so we do social economic footprint of potentially newly built or reconstructed student housing accommodation. So that level of detail is needed to be done in order to determine the purchasing decision. So it's not any longer on the surface, it goes down to very details, and that's what matters.
Okay, good. Any other questions? I've got my last usual one, which is to try and force everybody to tell me about their secret investment plans without noticing it. So I'm going to ask you where you would invest. So let's start with you, Daniel, at that end. If you had your own money and you'd got to invest in student housing or micro living, where would you invest it?
I would put a good chunk of the money into Ireland, but one of the reasons is also because we're relatively advanced in a partnership there together with GSA on a pipeline, so we got a head start, I think, to the rest of the investment world. I think Spain is very attractive. I think France is very attractive. And I believe in Germany there's still a good opportunity. It's just difficult to access given where the price levels are. With the residential and the zoning is the same, which means you're competing for line plots.
Okay, good, Rainer.
Yeah, but rents are still comparably cheap in a European context, which brings me to the fact if you would apply the UK PBSA accommodation rate to Germany, you would identify a gap of 400, 500,000 units missing. And how much money would I need to invest? I think
How much do you want? Daniel might also JV with you maybe as well, so...
I think that's the spot where I would invest the vast majority of it.
Okay, good.
I mean, we could team up on that one because obviously we have a similar view on the market, similar strategy. We think we've been very successful in Germany. It's been a strong market. I think the macro trends are very good. So I put a good chunk of that into the German market, and since leverage in Spain is difficult and expensive, a good chunk into Spain as well.
Okay, good. Samuel?
I would probably not name a country or a city because there are different angles or objectives that you need to follow. So it is really hard to say one size fits all or one location. But I think there are certain opportunities with big portfolios that we now see to be built, as well as some speculative tier 2 cities for those who go this route. So I think the continental Europe as such represents a really good opportunity, but it depends on objectives.
Okay, good. Roelfke, last but not least.
Yeah, of course the countries we are looking in at the moment, but not the main capital cities, but especially secondary cities in Germany, France and the Netherlands. And besides Spain, Italy is also, I think, a very interesting country to start looking at because prices are still slightly decreasing. So I think it's a good timing to start looking into Italy, so you can buy within 1 year.
Okay, very good.
Sorry, you got to allocate something to the UK as well.
That's what I was thinking. I was just about to give my money to the UK just for balance, and because we're here.
So that would be a little bit sad. Now, obviously, the UK is the most mature and most liquid market, so you do want to put some of your capital also in the UK if you invest in European student housing.
And if you could just take a moment to thank both yourselves, but also the panel, that would be great. Thank you.